We have Ambareesh Baliga joining us as well. Ambareesh, hi, good afternoon. A quick view on where you think we're going to end this series, so to speak, because things look fairly positive this Monday. And I also want your view on cement stocks, because the mood on that counter, or those sets of counters, has clearly changed.
In fact, if you're talking of markets in general, in fact, I've been quite bullish for quite a while. And I've been saying any downside is an opportunity to buy. And I think we've got enough of those opportunities in the past couple of months. And people, those who have utilized it, will surely bear the fruits of that over the next 2 to 3 months when you have the rally. At least before the elections, I clearly see one rally, possibly taking us to new highs. And we're talking on cement, clearly infra projects will take off once you have the new government. So from that point of view, I think even cement, I think one can start looking at this point of time, although they are a bit expensive, but still because of the infra sort of a rally, you'll have it rubbing off on the cement stocks. So even at these levels, I think one can look at it.
Are you looking, or do you have on your list to buy, Ambareesh, or to hold, or to add to the Ultratechs and the ACCs of the world, or are you llooking at some of the smaller cement players?
No, I think it's best to be with the bigger boys, and among them clearly it's Ambuja, which would be there in the portfolio in addition to Ultratech.
Sudarshan, your view on how these cement stocks look on the charts, and again, do you see more potential in some of the large cap cement stocks, or would you look at some of the regional cement plays?
I would avoid cement altogether. Cement has been underperforming and it's very choppy. It sometimes moves up and then we attribute reasons saying it's seasonal, things are going to become better, and it has sharp corrections. There are other sectors, IT, pharma, and as I said, private sector banks, which are more attractive. So as a trader, I always have choices. Cement is not a choice.
Is Ranbaxy a choice, Sudarshan? It's up about 11% in this series.
It is, and for two reasons. First, it's quite possible that the selling has been overdone because it keeps on bouncing from the lows. It does get those sharp declines, but then every time it falls, it gets support. And second, if the selling is overdone, then the pharma sector is outperforming and will continue to outperform. So this is a good stock to buy, yes.
Ambareesh, M&M, it's a share that's up today. It's also up about 7-8% to the series.
M&M, maybe I think one should wait for a while because we expect the auto numbers to start improving possibly post June, July. So auto sector overall, I think one can just wait for a while because most of these stocks have outperformed if you see the last 1.5 years. So need not be in a hurry to buy at this point of time. Although it's there on the buy list, in case we see a correction, yes, I'll surely buy M&M. That should be there in the portfolio, but not at these levels.
Ambareesh, to go back to the broader cyclical trend that you were talking about, capital goods have been amongst the top performers this series. L&T again, one of the star performers of the day, holding up the Nifty, so to speak. Where would you position your bets in this space, and how would you view it here onwards between now and the elections?
No, the markets overall, I have been bullish on the cap goods and the infra space, especially in the last couple of months. And L&T clearly has been our top pick, which anyway I've been recommending all through the time it was 750, 800 rupees. Even now, we feel that this stock can go to levels of about 1200, 1250. Among the others, they have also been underperformers. A stock like GMR, where we see levels of about 30, 32. ILFS Transportation is the other one which we are recommending. So these are a couple of those 2 or 3 stocks.
Sudarshan, you spoke of BHEL right on top of the show. Capital goods space, any interesting breakouts available for you?
Well, yes. Apart from BHEL, I also spoke of Voltas. So whatever, yes. I just treat it as capital goods. And L&T, where a sustained momentum tells us that there is more buying here. And a stock that I would avoid is Crompton Greaves, where I feel that a lot of resistance could kick in.
Well, on that we'll go into a break. We'll come back and continue our conversation with both Sudarshan and Ambareesh. Stay right there. We'll be back with more stock talk after a short break. Stay right there.
Welcome back. This is Closing Bell. We're going to talk power stocks now. In a landmark judgment over the weekend, CERC has allowed gross compensatory tariff of 52 paise per unit for Tata Power's Mundra Alta Mega Power project, and separately has also allowed a tariff of 85 paise against the Gujarat PPA and 36 paise against the Haryana PPA for Adani Power. Generally speaking, what it's done is compensate both of these power projects for the additional cost of fuel. Pragya Bharadwaj standing by to take us through what brokerages have to say of the impact on this stock. Pragya.
Well, thanks a lot for that, Menika. Clearly a very, very landmark judgment for the sector. It paves way for a lot of these private power producers, who had troubled PPAs because of change in the Indonesian laws or some other, areas, to now approach CERC for a case-by-case review of their particular orders. Important also because of the tonality of CERC, given the fact that pretty much all the recommendations of the Deepak Parekh panel have been approved as far as this order is concerned. So that has actually taken the street by surprise. Of course, the fact that, the order is retrospective in nature, something that the street was not accounting for, is another thing, but just probably gotten a thumbs up this time. The angle of litigation, of course, remains assured as to, who approaches the APTEL first, but, that we'll have to see, how it develops. As far as brokerages are concerned, big upgrades coming in for Tata Power, because now it curtails the losses that this particular UMPP was making. So Citi has upgraded Tata Power to now buy. They've raised their target price from 81 to 95. Post the hike, the stock actually now has started trading at actually very cheap valuations. If you see, it's trading at about 10.5 times on a price to equity basis, 1.4 times on a price to book basis, and this for a stock which is now going to give you EPS CAGR of close to about 51%. Of course, calculations suggest that now the losses could come down to just, the company could actually post a recurring PAT of close to about 280 crores. Tata Power, Macquarie has also maintained an outperform on the stock. Target price raised from marginally 98 to 202. They're making an interesting point, given the fact that, because Mundra's post the Mundra hike, it is still one of the cheapest power plants. The SEBs should not go to the APTEL and actually contest the order. So, big upgrades coming in definitely as far as Tata Power is concerned.
So, Pragya, one man's gain is another man's loss. NTPC is under pressure. The final regulations for FY 15-19 provided no respite to that company, right, Pragya?
These are different, pieces of news, but definitely, it's a big blow as far as NTPC is concerned. There were very aggressive representations that were made by, all of the stakeholders in January. But, at the end of the day, what we're seeing is there's no major change, that has happened from the draft regulations, which came out in December 2013 to now. So definitely, some benefits go away, as far as the tax benefits are concerned. Also, now the incentives will be based on, plant load factor, which is something which is not in the developer's hand. Those two being the prime negatives as far as this particular judgment is concerned. As far as brokerages are concerned, while they have an ad rating on the stock, so for example, IIFL, the target price being about 170 rupees odd, but they have sort of cut their target, their earnings estimate for FY15 on the company by about 11 to 12%. Also, they believe that now that the incentive is based on the load factor, the company will have to strive a lot harder to complete its captive coal project, complete the whole overall cost plus projects that it had signed up for to actually avail these benefits. Otherwise, it will be very difficult for them to maintain the kind of historical ROEs that they've enjoyed, them trending closer to about 10% versus 13.5%, 14% that they've enjoyed historically. So big blow for NTPC definitely.
All right, so you've got NTPC down there almost 11%. Thanks for that, Pragya. Let's go back to Sudarshan and Ambareesh. Ambareesh, power, how is it looking? Clearly, I think the streets, given the mood that ARP created over power companies, the streets have not been expecting this kind of judgment from the CERC. So
absolutely,
clearly showing that it stands independent of political influence. So how are you looking at these two?
Nifty bastards so work in future.
NTPC, clearly it is negative, and we have seen that crack in that stock, but I really don't expect that to really crack much further from here, because it's been in the price for a while. It's been underperforming in the last couple of months. But again, clearly power generation is important for any country, including India, and you really can't create capacities which are not making profits, and that needs to be corrected. And to a certain extent, we have seen that happening with this order as far as the private sector is concerned.
So Tata Power buy for you?
Tata Power is a buy. Adani Power is also a buy at this point of time.
But are you not concerned, Ambareesh, that there is going to be more litigation on this, right? The state power companies are not going to sort of keep quiet on this. So this could take a long time to come in terms of actual benefits to both these companies, if any at all, when the final litigation is over.
Sentimentally, it is positive, and it clearly shows the way the government is thinking as far as this is concerned. So from that point of view, I would say it's positive.
Sudarshan, how are these looking on the charts? NTPC and then the other two positive shares that have had positive fallouts.
No, NTPC was looking very terrible on the charts earlier, and it continues. So we don't buy it. In fact, on small rallies or even without a rally, it remains a short sell. Tata Power is the best of the power stocks. It's the correction in Tata Power is over. It built a small base. It's breaking out, and there are significant upsides possible. I would not say the same for Adani Power. So maybe among the electric supply companies, Tata Power is the most suitable.
Okay. How about another Tata company, Indian Hotels, up 24% over the month so far? Do you track it?
Yeah, I track it. Indian Hotels is not an intraday trade. In the sense, it's not an instrument that is available, that is prone for intraday trades, and the volatility is still less in spite of the rally. But for somebody who wants to build a portfolio, it's an excellent stock to own, not only because of the wonderful hotels, but also because it's coming out of a 3-year base. The rallies, when it comes about, will be quite impressive.
All right, gentlemen, stay right there. We're going to quickly check in on the markets as we head towards the last minute or so of trade. We are going to close at the high point of the day, 61.88 on the Nifty. That's higher by 33 points and a little over 0.5% in terms of gains. The Sensex up almost 0.6%. We're going to end with about 120 points in terms of gains on the Sensex at 20,825 levels. The mid-cap space also closing at the high points of the day, up by about 26 points on that index. That's 0.3% higher. On the Nifty, the top performing stock will be Tata Power, up more than 5% in trade today, closely followed by BHEL, which was up more than 4%. Axis Bank doing very well today, up over 3%. Ranbaxy, another big gainer, 3% gains on that stock. L&T up 2.5%. ONGC up about 2% or so. Dr. Reddy's, Lupin, both those pharmaceutical stocks gaining over 2% in trade today. And that you've got IndusInd Bank that aiding Axis Bank in the private sector outperformance that we're seeing today in terms of the banking space. You also want to bring in Bank of Baroda, that's done fairly well in trade today. On the losing side on the Nifty, NTPC going home with about 11% in terms of losses today. Bharti Airtel, that telecom stock, continuing to be under pressure, down 2%. Tata Steel down a little over 1.5%, a little under 1.5%. TCS also a loser today. Ambuja Cements, a big gainer from last week, down over 1%. Sesa is also lower, as is NMDC, Steel and Power, and Hindalco. So all of the metal stocks are closing with losses in trade today. Some of the tech stocks closing with losses, and most of the pharmaceutical stocks in fact closing with gains. That's how the Nifty has added up on this day, Santo.
Well, the mid-cap, as you said, down up about a third of a percent. It's been a nice day for some Tata House mid-cap shares. You've got Tata Tele is up nicely, about 6%. You've got Indian Hotels up, you've got Voltas up. So it's been a good day for the Tatas in the mid-cap space. You've got Triveni Turbine that was up on a big block deal, Muthoot Finance, DCM Shriram, GSPL. So it's been overall not a bad day of trade, especially when the rest of Asia has been so weak. On that note, let's thank Sudarshan and Ambareesh. What do we have coming up, Baliga?
Well, we decided, since we hadn't watched all of Raghuram Rajan's interview, that maybe we'll treat ourselves this closing bell to the entire interview. So instead of 6:30, we're playing the interview out right now as well. On the other side, an exclusive interview with the Governor of the RBI.